9:48 EST on May 19th. We came to the markets and we witnessed very powerful collapse that started in European session as the reversal zone to the downside had been reached. What do we know about the price? Price is incredibly tired and taking a brief pause. Buyers stepped in, moved up already for 3 points, long from 21.24 with target at 21.2775 in a play. Price is taking very sweet time, reminding you, know when not to short. What do we expect price to do? Push up. Is a conservative, knowledgeable trader buying S&P right now or taking long? Absolutely not. Pretty darn aggressive trade. Knowledgeable trader allows bullish pullback to finish and then would look to short. I cannot close trading room every time we are in counter trend structure. To the upside, 21.2775 is crucial level. The end of the minor bullish trend, and I warned you, it will be painful. Price will take its sweet time, but it's drastically more aggressive to short near this level, as you witnessed. Tomorrow to the upside, S&P struggled at this level for 3 hours. And this is precisely why at this level, the bias from 21.24 is firmly bullish. But I also know incredibly well this bullish pullback can be only a few points. But this is not the place you want to short into. Just like this is not the place you want to enter into. The fight is in. Price is taking its sweet time, as every time if you trade counter trend, expect to be in a trade for a while. Our conservative knowledgeable students reporting clearly shorting S&P from this area pre-market. Conservative knowledgeable trader allows S&P to push up and would look to short again. Bullish, pretty darn aggressive trade. So let's see what price will do. Will it crawl up to 21.2775 on this non-time based chart? Or will it sit here and torture us for quite a while? Counter trend structure can play out for the next 15 minutes or for the next 5 hours. We don't know. We just simply know exactly what to expect in this area. Just like we simply knew what to expect in this area yesterday. When price came here, I said, ciao kapao everybody. We ain't shorting against this spectacular bullish trend. Let's get the heck out. And this is the exact same thing I said right now. Ciao kapao, my knowledgeable, beautiful alphys. You have no interest in buying. It's very aggressive bullish trade. We are not far off from 21.2775. 21.2775 would meet 1-to-1 ratios. 21.29 would be even better ratios. But it's extremely important to monitor the price at 21.2775. As more than likely the price will struggle at that level. Because bullish trend is minor. It would be such a shocker and a lovely surprise if price would continue further up. Hourly chart is our guiding light, and sellers mean serious business. Knowledgeable trader taking a break, allow any bullish pullback to finish up, and only then, if alpha wave trader rules are met, trader will be looking for a short. This is bullish pullback only. Exact same end of minor trend on my non-time based chart on S&P is exact same place where Apple struggling on weekly chart. The end of the minor trend. The most important level where trend decides, do I want to remain minor or do I want to become major? This level is broken. Apple is heading to here. At every level, it's crucial to monitor for alpha wave trader rules to see if it's time to get out of position. What is bullish trend currently telling me on Apple? While we babysitting counter trend structure on S&P. Bullish trend on Apple is telling me buyers still remain in charge. We expect to see Apple here. Then at this level you would monitor for alpha wave trader rules to see if you expect Apple here. An exact same thing you witnessed on S&P hourly. Reversal zone, where S&P staged very powerful 10-point collapse in European session. Expect to see on Apple. As price the same everywhere. It doesn't matter what you trade. So will S&P crawl up to 2127.75 just like Apple had done on weekly? It's very crucial target. It's not just on my non-time based chart. It's on guiding light 1 hour. Monitor for response. All spelled out by the price since yesterday morning. Price struggled 2127.75 yesterday for 5 hours at the close, finding selling pressure. Will it do the same right now? Wouldn't it be marvelous if price will fly back up to reversal though? Highly unlikely. Price can dance between the levels for the next 5-15 minutes or for the next 5-50 hours. All we know to respect the price and to respect Fibonacci levels. Once alpha wave trader rules will be met, we'll be monitoring for short. We just simply know this is the worst place to short into. Just like yesterday, it was the worst place to enter into. S&P was stuck here for hour and a half, for point and a half. End of minor trend on daily chart. When you have end of minor bullish trend on daily chart, and when you have end of minor bullish trend on weekly chart, you witness what's happening. Serious selling pressure, as confirmed by reversal zone on hourly. We've been in incredibly aggressive and very torturous counter trend structure, as I warned you. Major trend is bearish. It's a counter trend fluff. As I warned you, it's drastically more aggressive to short into this level. As I warned you, pay attention to this level to the upside. I would be shocked and floored if S&P bullish push will be able to blast through this level. It would be flawless and marvelous if S&P will fly to here. This is where we would look to short, like Brian and Catherine had done pre-market. But first step is first, 2127.75 is the key. Drastically more aggressive to short into this level. S&P danced at this level for 3 hours yesterday. It may do exact same thing today. I cannot close trading room every time we are in counter trend structure, but I can show you clearly, time and time again, how essential it is to respect Fibonacci levels, how essential it is to know what not to enter into, where to monitor for counter trend, as all spelled out by the price since yesterday morning, since market open. And again, price could dance here for 5, 15 or 50 hours. We don't know. We just know this is not the place to short into. The end of the minor trend will forever be the most important level in the market structure. And that's exactly why it is never ever ever to be disrespected. It is exactly, if you're a position trader, you know what S&P is showing you. A weekly chart at the end of the minor trend. Daily chart at the end of the minor trend. Never enter into it. It's a crucial target. So will our very, very small chart that has no time attached to it will crawl up to 2127.75. Oil monthly, exact same formula as S&P hourly. Remember what happened on S&P hourly? Pretty powerful collapse. Watch what happened on oil monthly. We've been here for 5 months. But remember why we ain't shorting S&P at the end of the minor trend? Here's oil monthly. Bullish rally in 2011 and 2012. Completely expected. And as I posted on social media for the last 5 months, expect to the upside. The difficulty at this area. All the same formula. If you just remove the price and I move my price like this, you wouldn't have a clue. What chart is this? Is this Forex monthly? Or is this a tick chart? Is it gold or is it Apple? Price is the same everywhere. You learn the rules. It's up to you what you want to trade. Don't matter if it's S&P 1-minute chart. Don't matter if it's S&P 15-minute chart. That's all there is. Price is the same. Rules are the same. Risk management, psychological comfort, and account size is totally different. Just remember one rule. Never ever 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 disrespect Fibonacci levels. Every support and every resistance level is formed by Fibonacci. It's not random. As shown by oil in 2011, with bullish rally from 80 until 112, as shown by bullish rally on oil from 44 area all the way to 60, all we can do is play by the rules. The test never ever ever ends. An exact same thing as oil had done at the end of the minor trend, S&P can do right now on hourly chart. As I said very clearly, all we can do is respect Fibonacci levels. Never ever ever enter into it. Always play by the rules. Second time around, we almost been here for an hour in counter trend structure that S&P staged for almost 5 points. And that's very crucial reminder. As our students had said, ciao kapao lunchtime. Counter trend fluff in a play? Further we go, better off we are. It would be marvelous gift and surprise, massive surprise, if S&P will blast through this level. Highly unlikely. This is huge obstacle. Ladies and gentlemen, few ticks away from the end of the minor trend. Be extremely careful. Pay attention what happens next. And that's the power of the price and Fibonacci. 2 more ticks, 3¼ points later. Excruciating counter trend trade. What is happening there now? Stop at break even 21.24. Very important hourly level. Exact same level where S&P had found buyers last time on monthly chart. Exact same place. Nothing less, nothing more. One tick prior, as I warned you, we're witnessing sellers are stepping in. Bullish trend is minor, would be shocked and floored if this level will be broken and S&P would fly higher, because it is very important hourly level. So ladies and gentlemen, we've been in this painful counter trend trade for the last hour. You witnessed again the power of the end of the minor trend and Fibonacci. Here we are at the end of the minor trend. I warned you will be extremely painful area. 3.5 points later. Long from 21.24, struggling as expected, as I warned you. It's highly unlikely that price will be capable of blasting through this level. And that's the magic of the price and Fibonacci. And here are the levels to the downside on S&P. Are you ready to see them? This is where we expect S&P very shortly. 21.19 to the downside, then 21.14.50. Exact same level you're witnessing here right now. Monitor for alpha wave trader rules at every level, as each level is very crucial support level. The same level you're witnessing to the upside right now in a play. Again, prudent thing to do to get the hell out of this trade. Clear? No reasonable trader would remain in it, as I warned you. 99% chance it's ultimate destination, as I warned you. Monitor for a fill one tick prior. Torturous counter trend trade, an hour in it. I don't have a good news, traders. I don't have a good news. Price never flew to reversal zone. Perfect place to short from. What can S&P do? Continue worthless chop, as I warned you. Once this worthless chop is over, S&P will collapse to here. Monitor for alpha wave trader rules at 21.19, and then here each level is a crucial level to the downside, our guiding light for day trading. And again, the same exact reversal zone you witnessed to the upside on S&P, where sellers stepped in from, is exact same reversal zone where oil had found buyers. Is exact same end of minor trend on S&P to the upside, where Apple weekly been struggling at the last 3 months. At any moment, we will be monitoring for short on S&P. The only problem I have with S&P, this is the perfect place to short. Shorting here, extreme caution. Remember, this level is a problem. As spelled out at the market open, we ain't shorting this late. So this is extremely dangerous place to short. We're gonna be stuck here, shorting in this area. The very dangerous thing to do. Do I know that market will collapse to the downside? 99% chance it will. Only 1% chance the price will remain here, or anything powerful will happen to the upside. Make sense? We are in counter trend trade. This is all that there is here. And again, decision point 1, as documented on the results, 3.5 points on that trade. Not a bad gig, even in this market conditions. Not a bad gig in yesterday market conditions, where we still managed to pull 2 points. 25 trades, 23 positive. 3.25 points, 3.5 points. We are out. Let's monitor for short. Third hour in a row, price is struggling, reminding you, do you know what not to short into? As I spelled out clearly time and time again, bearish trend is major at the end of the minor trend. This is the most crucial support level in the market ever. We always have minor trend, we not always have major trend. Bias here is counter trend bullish, with this level being the key to the upside. This trade currently with long from 21.25, target 21.2875, stop 21.22, in a progress. Price is showing it has potential to get to higher level than on the first bullish trade. Remember what I said? Wouldn't that be magic if price will fly all the way to here? It would be magic to look too short from this area. Second bullish trade will this time around price blast through this level and fly until reversal zone. Showtime. As I spelled out to you clearly that this time price is pointing to much higher end of minor bullish trend. This time price is pointing to more than that. Even 21, 30, 50. But first things are first. Remember, one tick prior to the end of the minor trend, this level to be respected dearly. Long from 21.25, 3 points later. 1-to-1 ratios are met. 6 points. Price is magic if you play by the rules. So here's a big problem area, as I warned you. Monitor for selling pressure a couple ticks prior. Make sense? 3.25 point, another trade, and pain and suffering from the end of the minor trend. Let's update the results. We are in counter trend, and decision point 1 continue scoring 3 and 3.5 points. Counter trend, that's all that there is. Respect the levels and know exactly when to expect selling pressure. Bullish trend is minor, as I warned you sincerely this morning. We are in a dance. Magic happens if buyers will find enough pressure to fly back up to reversal zone, or it's a perfect place to short from, but only if rules are met. And that's how the top, and that's how the targets identified by key alpha wave trader rules. No indicator of any kind used. Simply price and Fibonacci. Fibonacci available on any platform. Any platform. The tool is free. You apply knowledge, you apply rules. You want to trade on Infinity, TradeStation, Thinkorswim, E-Trade, Interactive Brokers, Sierra Charts, whatever platforms our students trade, whatever instrument you trade is up to you. So, price is magic, and Fibonacci tool will show you, if you play by the rules, where these targets are. Ultimate counter trend day. Ultimate sluggish buyers, ultimate tired sellers. And that's what we're witnessing. And that's the results. This painful counter trend morning. We've been here for 2.5 hours. And I warned you, I am not the master of the timing, but I can tell you how important and precise and accurate alpha wave trader proprietary Fibonacci levels are. I cannot be more proud and honored to present and show you that price is magic, and that every single Fibonacci level and every single price structure is not random. It's precise and magnificent. So this was ultimate test of your knowledge this morning, traders. 12 EST, 3.5 and 3.25 points. 6.75 points. And that's the magic of the price, even though only decision point 1 was reached on both trades. Ultimate test of your knowledge, ultimate test of knowing when not to short, when to look to take long. Ultimate test of the importance of Fibonacci and price structure. And that's what it's all about. Fear price for entry and Fibonacci for exits. Have a marvelous afternoon. Look forward to seeing you tomorrow. Sharp 9:30 EST if you would like to see Fibonacci wave review. and what we expect for the remainder of the trading day. Again, levels to the downside. We'll be discussing with you tomorrow morning with my students. We'll be spending a whole lot more time today enjoying the magic of the dream. And here we go. Levels to the downside, 21.19, 21.14.50. And here we go. The reversals on it will start being very interesting. Collapse had started from 21.33. Don't be surprised if you see spectacular bullish rally from reversal zone, but key levels to the downside remain in front of you. And at each and every level, you have to monitor for alpha wave trader rules. Ciao, kapao. See you tomorrow.